Hello, traders. It's Wednesday, the 8th of May, 2019. It's 8:02 a.m. here in Chicago. Another rainy, windy day. Not too much fun. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. So you probably saw that the market just whipsawed pretty good. The S&P jumped from 2870-ish to 2886-ish, 16 points, and then came right back down. And I'll tell you what drove that. What drove that is right at the point where it took off. There was a tweet from the president of the U.S. saying China vice premier is now coming to the U.S. to make a deal. Believe China had been trying to delay talks past the end of his first term. And he goes on and on and on. And we'll see, but I'm happy with over $100 billion a year in tariffs filling U.S. coffers. Great for U.S., not great for China. Of course, the $100 billion would come from U.S. residents because that's who pays tariffs. But immediately after, that was at 8:48 Eastern, at 8:55 Eastern, the U.S. government issues formal notice that 25% tariffs on 200 billion worth of Chinese goods will take effect Friday. So the market drops from 28.86 and a quarter. The ES drops from 28.86 quarter to about 28.77 and a quarter. A very, very, a very, very quick whipsaw there. I'll show you that on the market depth. Anyway, so this morning, what is the market sentiment? It is mixed. The DAX is up 71 and a half points or 0.58%. Gold is up also. Gold is up also at 0.37%. Crude oil is up 20 cents or 0.33%. The Nasdaq, the Nasdaq is a laggard, down 50.75 or 0.7%. The Nasdaq has been as low as 7602, which is about 18, 20 points down. The Russell's down 8 points or 0.5%, and the S&P's down 12.5 points or 0.45%. So again, mixed bag. There's money going into the treasuries. There's allocation to the treasuries. The 10-year notes are up 2.5 ticks, and the bonds are up 6 ticks. The Bund is up 22 ticks. Again, mixed message. Mixed message into today's session. As far as what's ahead of us here today, what remains? What's going on here? Funny, these calendars, they often don't work right. What remains ahead of us is the crude oil inventories, expecting 1.215 million surplus, expecting a gasoline draw of 434,000, and then this evening at about 9:30 Eastern, we get the China inflation rate year on year, expecting 2.5%, prior is 2.3, and PPI also at the same time. Again, the U.S.-China talks are ongoing. Take a look, pay attention to your news feed, as indicated before. Convergence members all get the news feed included in their membership, as well as access to a variety of services. It's a virtual prop shop, basically. So that's where we stand. Let's take a look at what we expected yesterday. So yesterday, the primary scenario, and it doesn't always work out this way, and those of you who are here saw this. The primary scenario is a push up to 29.14 or 29.15 was the key area that is outlined right here. This is the stock zone that represents it. Expected a push up into that 29.14-15 area, and then expecting an impulse down. That's the impulse right there to take us out of the prior range. This is the prior low, take us out of the prior range, and the target below is 28.84, 28.82. That was the expected target on scenario one. The secondary scenario is a drift down towards the low and then a push up, which would make us responsive. All of that is dependent on how things play out, but I expected a test of the high volume area up here on scenario two if we test down first. Remember, this is all based on the auction market process. There's no magic here. Again, the primary scenario up to around 29.14, 15 push down through the low, 28.82, 28.84 is the key target. Here's what actually happened. Well, at least the start of it's more obvious on my Renko chart. Let's back up. Here it is. So there's the open auction, just like I show here. See that open auction right here? And then a drift up into 28.14. There it is. Drift up. And it turns at 28.13 even, does not get to the 14 or 15 area, and then starts to shift down. Here's your impulse, continuation impulse, and then a push to 28.82, so we get to 28.95 initially. I'm not going to do a full walkthrough here. We do that at Convergent, but there's no time for that here. For a push to 28.84.82 below, that's the key target. And really beautiful pullback to the mid open OS low VWAP stock zone area. Really big area up here on the test 2905 mid short. I narrated that in the head trader channel at Convergent, and we push through the low, and then it starts to squeeze to 28.90, comes back. Where does it go? VWAP and mid again, rotates back through. Remember, we're only trading on the short side once we see that impulse down. If the screen is blurry, it's because you're watching it in 720p. You need to switch to 1080p. You control that from your viewer. So here we are. We push back right into the stock zone and prior low. Again, an opportunity for a short, only looking at the short side. Okay, there's nothing that tells us to look long just yet. And we're waiting for 28.82, 84, then 82. And there it is. Boom. Hits 28.82, 75. 82.50 is the spot. 82.75 is the point of control, the naked point of control. Hits it on the spot and bounces back up. Expecting a rotation back into the initial balance from there before the market decides what it wants to do, and it's just not able to do that. It tests farther down, and then it finally starts getting a bid, but overall it's just not able to find buyers, right? And so that's how things have played out. So I'm not going to go through the entire day, but ultimately we finish up with a test of 28.63, some really big range yesterday, basically 50 points down from 29.13 to 28.62.50, and the market ended up finishing at 28.90 or so, right at the initial bounce low, just inside of 2 Vol Sigma, or the volatility sigma band based on the closes, which is relatively rare. This is an initiative day down on a day time frame basis, right? On a end of session or pit session basis, we're seeing the market kind of releasing to the downside. The big area below us at 28.58 did not get tested, was just 4 points below. A strong push higher. Look at the volume on that push into the close, and the overall volume yesterday was 2.32 million contracts, which which is really heavy. It's about double what we would normally expect for this product on an RTH basis. So big day down yesterday, but a strong bounce into the close. We still have those buy the dippers participating. Let me see if I can find the composite here. Yep, here's the composite. So we got really close to that 50 SMA on the daily. I don't really look at moving averages except on a day chart, day and week. And the market is just, even though everybody's crying bloody murder or whatever because of this sell-off, really we haven't put too much of a dent into this massive rally that we've been having since the beginning of the year. Very, very relatively small pullback. The high held at 29.56, so we have a major double top up there that spans across, I think it comes to us from September or October of last year, and we're pulling back just a tad. But if you look at yesterday's action, look at that wick it left behind on the close. This could potentially be a reversal point for higher depending on what it does today. So I'm paying very particular attention to what the market is doing today in order to determine what's likely to happen next. So today I expect buyers to step in and defend this thing, and we'll see if that happens. The overnight session drifts sideways during the Asian session. During the Asian session, there wasn't anything really major that came out over the extended hours in the U.S. German industrial production came in relatively strong. It was expected at negative 0.6, came in at plus 0.5, and then housing starts in Canada came in stronger as well, expecting 196,000, got 235,000. But overall, we pushed into 2889.50. 28.99.50 right up against the century figure, this yellow line right here, and then we have sold off, pulled back to mid on that news from the tweet from POTUS, and are looking like we want to continue a little bit lower. Yesterday's profile, multi-distribution profile during the day. The market could not find consensus. It was in price discovery mode down. Again, we don't want to fade price discovery when we can detect it early on. We want to trade from the side of the seller in that case. And overall, the overnight session shows a very similar profile. When you look at yesterday's profile, the overnight session shows basically the same kind of discovery going on inside of yesterday's range. Tough read this morning, but it looks like it is not done to the downside for now. The volume overnight is outstanding at 526,000. That's very heavy, about a factor of 4 to what we would consider be the expected volume for the session. So this is a very active overnight session. And here's what the news looked like from our president. Here's the pop higher. Let me reduce these dots. This is CT Bookmap. You can get it at ctbookmap.pro. It's the execution platform that I use. And here we pop from 2870 all the way up to 2886.50 or so, and that was the news on that China wants to make a deal, and that they were thinking they're going to delay it through his first term. And then here's the news from the government stating that the 25% tariff on 200 billion is going into effect in 2 days. And now the market's a little confused about what it wants to do. The overall depth and liquidity, the market depth, the order flow and liquidity has been noisy overnight. It's not usually this terrible but it has been quite noisy. Let me clean this up a bit. Oh, I'm on 50. Hmm, interesting. Um, it has been noisy. I don't see a lot of, I just don't see a lot of firmness here. You look at the liquidity below, and there appears to be a pool forming down below, and very little up above. But overall, it's been really, really noisy. You can see this algo tracking the market throughout. It starts with the European session. It just continues to track the market throughout the day. But overall, it thickened up at about 6 a.m. Chicago time, getting even thicker at about the Treasury open, and it'll get even thicker as we approach the open. But the liquidity in the market, the order flow, and the offers and bids in Bookmap are not giving any indication. There is an expectation that the market is likely to drift lower based on the liquidity available below, but it's hard to say. So what do we got? What do we have for today? What are we expecting? The overall picture for today, let me just get my colors right. Consistency is key. The overall picture for tonight, the point of control just shifted down in the overnight session. Remember, in this product, there's about an 85% probability we would touch the overnight point of control before the close of session. That's shifted down a little bit, changes things just a tad maybe, but overall, I'm expecting an open auction in range to move um, back towards 28.72, consolidate in here. I'm looking for an impulse higher, consolidate, and I'm expecting a grind up as a primary scenario this morning. Okay, so overall, I'm expecting the market to kind of grind it out to the upside. The secondary scenario overall is an expectation that the market is likely to try to squeeze up and then push into this overnight point of control, hold steady at 28.75, and then let go finally to finish the impulsive move that occurred yesterday. Finish that off with a test of 28.58.75 or so, and then potentially find a bounce. Or if it doesn't, then it's likely headed for 28.44 below, giving us a reasonable range for the day. Now, remember, yesterday was a pretty wide range from high to low. It's unusual with very, very high volume. These two have an equal opportunity. There's a potential that scenario one actually dips below the low. The reason I don't have it do that, I normally would. It might dip below the low. Where are we here? Hang on. Change the color, but it didn't take. Might dip below the low here before yesterday's low, before it actually bounces back up. I'm not sure, but I'm going to sit on my hands the first 20 minutes or so. Just remember, I want to leave you with this message. Do not trade the ES if you do not have $6,000 per contract, at least half the initial margin, which is around 6,800 bucks or so. So if you're trading an account that's less than $3,400, you should be in the micros in the MESM 9 or MESM 19. The liquidity has been outstanding. The volume has been incredible in there for a product that's only two days old. You really should be executing in there for 1/10 of the risk. Yes, the cost is higher, but 99% of the traders that I run across, it's not their cost that's killing them, it's their losses. So at least work things out with that small an account. You should be working things out in the micros, not in the ES. No, I don't get paid by the CME to promote the micros. This is a product that I started pushing about 7 years ago, and it finally came to fruition for the sole purpose that most people struggle with the liquidity available to them, especially at these $500 margin or $400 margin rates, which I think are a terrible thing in our industry. So overall, step it down to the micros, do your homework on the ES, step it down to the micros. If you haven't had a chance, take a look at the Trading Futures with Anthony Crudele video that was released yesterday. It's on my Twitter feed. You can find it at twitter.com/futurestrader71. Listen to that so you can have an idea of why you should be trading the micros under certain conditions. Good luck today, and I'll catch you tomorrow morning. Take care.